So we're live on Facebook and just kind of here to answer any questions, kind of talk about some of the questions that we've been receiving from clients over the past couple of weeks. We meet with our clients on a quarterly basis, so we're just kind of getting over our estate planning and reiterating taxes and making sure everyone's taxes are squared away. And so we'll answer some of your questions out there. If you have something, please feel free to put them in the chat box. But we'll just kind of go through a panel discussion about some of the things that we've been hearing. So Nora, I'll let you take it from here.
Perfect. So first off, I hope everyone had a wonderful Easter. Yesterday, I know it was Luca's first Easter, so we did see the Easter Bunny, enjoyed some time outside. Here in Greenville, South Carolina, it was about 70 degrees. So it is the first Monday of the month, April 5th. Like Sean mentioned, it's our monthly market insight. And so some of the conversations we've been having lately is about the market outlook. So what is our outlook for 2021? It's been pretty dicey thus far, and although Sean and I cannot predict the market, there are some indicating factors that we've talked to clients about. So Sean, before we get into what our outlook is, let's take a step back and really take a look at where we were about a year ago from today. So if you can remember, March of 2020, the markets hit an all-time low. Obviously, what we've termed the coronavirus crash. The markets went into a very short-lived bear market. But on April 1st of 2020, after the markets hit the low, Sean, you held a webinar. I think it was titled, if you can remember, the coronavirus crash, 10 things to do with your investments. And the very first thing on that list was do not panic. So can you kind of talk to us about what you find investors do when they panic, when there's a market crash, and kind of show us what it would look like today?
Yeah, so we held that market outlook, and I'm not going to pretend like it wasn't scary for us as well, right? The market dropped very, very quickly, very, very fast, right? Over 30% in a matter of about a month. And I remember my birthday, it was on March 17th. It was like, this is really getting pretty scary pretty fast. And so we were putting out webinars like this, telling clients, telling people that follow us, don't panic, because we've seen crashes before, we've seen recessions before, and all of the data, right, without trying to time the market, without trying to guess, it is overwhelming that if you stay invested, if you're in a portfolio where you know how much can go up and down, you stay invested, then you're going to maximize your wealth. And so we were telling clients, we've been through pandemics before, we've been through recessions, and if you stay invested, you will come out on top. And that's exactly what happened. Now, it came back quicker than even we thought, right? But again, because we're not trying to time it and get in and get out, just staying the course is going to get you the best result. You don't have to, try and get the month that it's actually going to go up. So clients stay invested, and everyone's portfolio last year was positive. And for me, it was very humbling and just felt great because we didn't have any calls from clients saying that they wanted to sell the cash. And I talked to other advisors that I network with, and they were talking about how their clients' money was sitting in cash. And I just thought to myself, wow, they're gambling with people's money because they don't know when it's going to come back. They don't know how much it's going to go down. And so I know that our clients did the right thing. They trusted us because of the content we put out, because we use data. We're not trying to sell things. And because of that, everyone came on top. And so staying the course is the best option. It's just one data point. 2008 was another great data point. 2000 was another great data point. Over and over and over again, we see markets crash. And if you stay invested, your money will come back. You just have to believe in the way that you are investing and not try and time it, not try and pick certain sectors. And ultimately, that's going to give you peace of mind, and you'll get the return that you should.
Yeah, so I know another thing we've talked to people about is another key part of that is just being in a portfolio that you're comfortable with. So, let's say you're in 100% stocks and you see these very large swings and, you're panicking, maybe that's not the right portfolio for you. So that's just one thing that we work with clients on, is just finding that right portfolio that matches their comfort for risk.
Yeah, and I think what was great was the calls that we did receive from clients. It's not like clients didn't call and say, hey, this is pretty nerve-wracking, what should we do, right? We would look at their portfolio and say, hey, you know what? You're not in an all equity, an all stock portfolio. So the reason your portfolio hasn't gone down 30, 35% like the TV is screaming at you is because when we had our initial conversations and we talked about your goals, we realized, right, and communicated with our client that an all equity portfolio is probably not right for you, because if it does fall 35, 40%, you are going to sell and move to cash. And that's how you're going to hurt your family and your goals, is by not trusting it. So we put clients in a portfolio that was way less risky so that they could stay invested through those turbulent times, and they did. And so we had that conversation. We made sure they felt comfortable. We coached them through that behavioral challenge, and they came out on top, right? And that's a lot of the value that we help provide to people, is just giving them the emotional intelligence to stay invested so they can maximize their wealth.
Great. So now that we've kind of taken a look at where we've been this past year, good news is we made it through the first quarter of 2021. We made it through a lot. The vaccines are starting to happen. We've seen just the latest job reports is pretty positive. So some indicating factors as we get into 2021. Again, Sean and I can't predict the markets, but Sean, can you talk to us a little bit about the conversations that we're having with clients when it comes to what 2020 may look like, and then the years beyond that?
Yeah, so for 2021, we think that it's going to be volatile. Right, there is still a lot of uncertainty, and during the presidential election, we're putting on more content talking about we really don't care who the administration is, even though it's an emotional discussion, and no matter what side of the aisle you're on, it just stirs up a lot of emotion, maybe more so now than it has in the past. But we don't care because we look at the data, and we've seen prior administrations, we've seen presidential changes, we've seen the incumbent stay in office, and overwhelmingly the market continues to go up. And so we were coaching clients, stay invested. It's all going to work out. Try and bury some of those emotional decisions and feelings inside, and look at the data, and the market will go up. And it has, right? And so for year to date, the S&P 500 is up 7.02%. The NASDAQ is up 4.59%, right? Through the close on Friday. So it's been a turbulent time though, right? Beginning of March, the portfolios were flat. S&P was close to flat, just slightly positive. We've seen weeks where the market's up 2 or 3%, weeks where it's down 3 to 4%. And so it has been all over the map. It just so happens that at the end of the quarter, it turned out positive. So what we're telling our clients is there's still a lot of uncertainty out there, right? We have the threat of potentially higher taxes, debate on who that will affect, incentives for people maybe not to go back to work. How will those things impact the economy? And so the good part is, what we tell clients is, we've seen all this in the past, right? We've seen prior administrations come in, threaten higher taxes, threaten to lower taxes, threaten to give stimulus, so on and so forth. We had another round of stimulus in the first quarter. We see all of those things, and none of that is really moving the markets, in our opinion. It will create ups and downs, but it's not going to have a big long-term effect. Companies will still try to find a way to provide value to their shareholders. They always have, no matter if there's a tax increase or not, right? They've always found a way to provide value. So we don't mind those things. The thing that we're watching is the coronavirus, right? How fast will people go back out to work? How fast will people start to travel again? And we're already starting to see, I just saw a headline this morning, all of the major airlines, the Uniteds, the Americans, the JetBlues, Southwest, Deltas, they're all starting to rehire pilots, meaning they just went through this tough time. They want to start the training pipeline because they're already starting to see reservations. So we're starting to see more business travel. We've seen companies like Facebook and Google and some of the big conglomerates say, hey, we didn't think employees were going to go back to the office until maybe summertime, but they're starting to roll that back out now, April, May timeframe. So things are starting to get back to normal. We're getting more vaccines out there. People are becoming more susceptible to taking them. And so that coronavirus to us is really the key indicator, because we don't have a whole lot of data to go back and say, here's how fast the economy is going to open up. Here's how fast people are going to take the vaccine. Here's what the vaccine truly is effective. We don't need it every 6 months. We don't know all of that. And so all of those things are going to create this volatility up and down. But what we do believe is that whenever the market does get comfortable, whenever people do feel really comfortable, and I don't know if that'll be this summer, this fall, early next year in 2024, right? We don't know when that will be, so we're not going to try and time it. But we do believe that the fundamentals of the economy are really strong, and we anticipate a really, really strong growth period. And we do have data on that. We go back to look at things like World War II in the 70s, when we did have a lot of inflation and growth in the economy. because 2/3 of the US economy is based on consumer spending. And so what we have seen is people are saving more, right? When times get tough, people save more money. When times get tough, people pay down debt. When you get stimulus from the government, people are paying off credit cards. All of those things lead to people getting ready to go spend money. They want to take the vacation they missed. They want to go see the loved ones that they haven't seen in a while. And so we anticipate consumers really spending money, maybe 2021, but probably definitely 22, 23, 24. And so we expect maybe the roaring 20s again with consumer spending. The other thing that we're seeing, and we've got clients in almost all 50 states, is no matter where you live across the country, everyone is telling me, Sean, my house is going through the roof, right? There's so much value in my house right now. Well, as Americans, right, a lot of people, I believe, will suck out the equity in their home through a home equity line of credit, a refi, whatever it may be, and then they'll go do the remodel on their house or go take the trips. They'll buy toys like boats and whatever it may be. And that, again, will spur the growth in the economy. Now, I don't recommend you do those things, right? Keep that equity in your home, but that tends to be what happens. And so putting together a good financial plan will certainly help navigate those times, but we want to be poised to have a lot of growth in the economy over the next couple of years, because whenever the coronavirus provides some clarity, we think the economy will grow. That being said, we're not making changes. We're not trying to time the market. We've got people in the portfolio that they should be in, but we are doing things like rebalancing. In fact, we rebalanced today. Equities are up. And so we wanted to sell equities while they're high, buy bonds while they're down. So we're seeing bonds this year are already having a pretty negative draw. Stocks, equities are high. Let's sell the stocks while they're high, buy the bonds while they're low, and put people back to their risk tolerance. That's something we actually executed here very recently, and something that people should do within their own portfolio, or at least look at, talk to an advisor to see if that makes sense for them. But that's really what we see in the economy over the next couple of years, and kind of how we see this year being. I tell clients this is not a good predictor, but I think this year could be positive. It could be negative. None of it would surprise me, but I anticipate over the next 4 years that probably being a pretty good positive run, barring some black swan event like another war or another pandemic.
So in addition to kind of the market outlook, taking a look at where we were about a year ago, we have been talking a lot about estate planning. In addition is taxes. And you kind of brought that up, that they're, April 15th is coming up, but a lot of people may not know the extension of the federal tax deadline to, I believe, May 15th, correct, Sean?
May 17th. Yeah.
Oh, May 17th. So, and with a new presidential with Biden, and I know taxes were kind of on his campaign trail. Any indicators, anything you can kind of tell us about taxes, things to prepare for, maybe not just for 2020, but going into 2021?
Yeah. So one thing, and this is really one of the biggest values that we provide to clients, and an advisor really does, is putting together a good tax strategy, because you want to be smart thinking about taxes, but you don't want to just make all of your investments for tax purposes, because tax laws change. And, Biden ran on a campaign of a change of the tax laws and change of the tax code. And they're already starting to talk about some of those things and tax reform coming. So what can we do? We can do the best we possibly can based on all the known information today, based on, kind of people's income, what their goals are, come up with the best tax strategy. Additionally, right, one of the things that we're watching very closely is the estate tax exemption, right? So right now it's about 11.5 million-ish per person. And so in the early 2000s, we saw that as low as 1 million. And that's one way that you can tax the wealthy. And that's really what their campaign was ran about, was taxing wealthy people making only over 400,000. We'll see if that plays out. But one of the ways to do it would be the estate tax exclusion. And so that's one of the things that we're watching very closely, because that can help people plan during retirement about gifting and setting up trusts and making sure your loved ones get as much of your assets as humanly possible, because it's a pretty stiff tax, the estate tax. And so having a good plan, putting that in place is one way that we provide value to clients. And you're right about the federal extension of May 17th, but know this, it'll be more than just federal. The state of Ohio recently extended their tax deadline out to May 17th as well, but that's not true for all states. So we've got clients, for example, in Virginia, that last time we met a couple of weeks ago, Virginia had not yet extended out to May 17th. So Just because federal is extended out to May 17th doesn't mean that state and local is. So I recommend that you check with your tax advisor, check with your state and local municipality to find out if that tax filing is also extended, or else you have to file an extension.
Perfect. So that's kind of all the questions and conversations that we've had reflecting on the month of March. If you have any questions or comments, send those in to Sean and I, and we'll look forward to talking about those the 1st of May. So everybody enjoy that warmer weather, and look forward to seeing you and back on here on Facebook Live in about a month.